Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close, kicking off Monday after the holiday weekend. Hope everybody had a great time with their family, celebrating Easter. And if you don't, you had some nice time off to enjoy time with the family. So back into the markets where we love to be. A lot of data happened today, and we had a big red day on the markets, thus the red shirt. Everything is down on the markets. Let's jump into the data. I've got some technical analysis I want to show you so that you're prepared for future trading days. So, all right, no further ado, let's jump into the spiders that we see here. And here we go onto this. And then first, though, let me show you the heat map. Heat map, as we see, red, as I've seen all over this screen, red, except for this one little outlier in Netflix. I talked about that last week, made an awesome day trade on it today. And if you guys followed some of the news that I told you last week regarding Netflix, you'll see perfectly what I'm talking about when we get into that chart a little bit later. Dow Jones, though, down 2.65%, NASDAQ down 2.95%, S&P 500 down 2.61%, U.S. oil down 1.36%, not confirming the breakout last week. We're going to jump into that chart in a little bit and show you more about why that happened. Gold continues moving higher, and so does Bitcoin. But a lot of analysis I did over the weekend is pinpointing a reason why Bitcoin and other cryptos are holding up, mainly the US dollar. And I'm going to show you that chart here in a little bit too, so you can gather some information to understand why crypto's doing what it's doing. All right, so now into the spiders. As we see here now, we've had 5 consecutive red candles on the chart. If you know anything about time counts, I don't think this selling is over with just quite yet. We have major support on the spiders down here at 499, basically 500. A pierce of 500 is going to be the next major support on the spiders. And then following that down here around 480. That doesn't mean we can't chop around a little bit before we fall. But if we continue this momentum down into this level, that should be a very good bounce opportunity. And you might say, well, why are prices falling in stocks? And a lot of the reason is, again, uncertainty. We were almost anticipating this weekend to have some sort of break of news with tariff deals. We've been hearing about it for the last week or two, number of countries calling in for tariff deals, but we don't have anything yet. So the markets aren't liking this uncertainty and are just continuing to sell off in the near term. All right, so back into the charts. Looking at Bitcoin. Now, Bitcoin I've got here on the 10-minute. We'll first look at the daily, and then I want to zoom in and show you some great technical analysis. But over the last several days, I was telling you how Bitcoin is almost coiling up for a move higher on the charts. This bullish consolidation gave it the power now to break above these previous pivot points. Today's price action, we want to watch and make sure price closes above the high here, $86,491. If it does close above that pivot, that opens the door and increases probability for a higher move up. First stop is going to be $90,000, and I think that's more or less a speed bump. But then the very next major resistance is going to come at the bottom end of this parallel channel, right around $95,350. Now, back into the 10-minute, I want to show you guys some amazing technical analysis. It doesn't really take much to find when price is going to change in behavior. We had a major pivot point here on the 10-minute chart of Bitcoin, connected over to this pivot point right here. And then notice where price action today ran straight into before getting rejected. This is technical analysis 101, very easy for anybody to spot as long as they have those key foundation levels of where to draw these trend lines and understanding how price behaves after hitting those trend lines, especially in the fashion in which it hit it. Notice these 3 candles just went straight up into this resistance and then started dropping around. It was a little bit deceiving, could be bullish consolidation, but ultimately this resistance won out and pushed price lower on the charts. All right, into gold. Gold having a monumental day, but you can't really have gold and Bitcoin going up without considering what's going on with the dollar. So we have the US dollar that I'm flipping to right here, and you see bearish consolidation was taking place on the chart right here, right under the $100 mark on the US dollar. Well, today the dollar fell off this bearish consolidation and is starting to move lower. You see now we're going to close beneath these low pivots, which opens the door for the next support spot to get tagged at $94.93. So what that does with gold, typically with FOMC meetings, now it's a little bit more complicated, but usually whenever we have major FOMC meetings, we watch the reaction of the dollar and the gold. And usually those move inversely of each other. And also the stock market, when the dollar's coming down, usually the prices of stocks are actually going up, much like what we see with gold and Bitcoin. So the US dollar is playing an integral part into Bitcoin holding up strong, other cryptos too, but then also with gold. So we really have to watch the dollar moving forward a little bit closer to understand its correlation with gold and Bitcoin. So as you see here with gold, now eclipsing this first area high-end target of mine at $3,400. Next spot will be 35, followed by 36. Those whole even numbers are going to serve major resistance spots on the chart for gold. Now, gold with its monumental move should have a 10% correction at minimum whenever its peak is put in. So we'll be watching over the next several days. 10% correction puts it right down to this trend line. And initially when price was here, I was anticipating price on gold to come all the way back down to 28.70. Looks like this area is the first major line in the sand when gold does correct, come down right around this $3,100 area, maybe even pierce the top end of this blue parallel, which is at $3,076. All right, into silver. Silver here, as we've seen here, we've notified every one of this resistance at 32.87. So far, that is holding up to be true and still being resistance into today's trading action. And notice also these wicks are poking right above this resistance area. This is weakening this resistance area. So if silver stays and maintains right here in this price area, right here from 32.50 up into this resistance zone at 32.87, that will be bullish consolidation, allowing it to gain momentum to move higher, which the next moves higher will be 34.60, followed by this other resistance trend line at 34.86. Into oil. Oil did fall back down under this major line in the sand that I had mentioned over the past couple of weeks. We had a great move up last week on Thursday, and then today's price action collapsed all the way back down, almost erasing all of the gains on Thursday, but has since now bounced back up. Keep an eye on this trend line here with oil. If we close beneath, it's almost like this breakout never occurred here on the chart with this green candle, and so it resets the clock for another potential break above. But again, with any sort of consolidation right here, that could also gain power and momentum for US oil to break through. If that doesn't happen, all of this still is bearish consolidation, and the area of least resistance will be down for it at $53.15. That's why this trend line and price action around it is so important to understand if you're interested in trading US oil. Into natural gas did fall off its minor and immature bearish consolidation right here. So we had an accelerated move down, came down, kissed support, hit a low today of $3.13 and 1/10 of a penny. So it kissed this support area at 313. Consider that tagged. And the very next support for natural gas is not far away. It's down at 306. So just about, 7 cents from today's low, and you're going to find the next area of support. Now, if both of these support areas get blown through, the very next major support for natural gas is all the way down at $2.55. Keep that in mind. Now, the resistance moving up, now we are going to confirm here on natural gas, is going to be this inclining trend line. This inclining trend line currently is right around $3.47 on the chart. As I explained with the dollar breaking down again, confirming today underneath these pivots, that's going to be very bearish for the dollar in the near term. A lot of this has to do with what's going on with tariffs, other major countries exiting some of their investments with the United States. Is all pulling the price of the dollar down. So if the price of the dollar continues lower, expect support right around $94.93. That's still pretty decent way away, right about 3.41% on this chart. Into the 10-year. Now the 10-year is moving up, and that also creates lending issues for folks and also companies that are trying to lend out money or get money for their leases, for their mortgages, for their cars, for large expenses. This is not good news for the economy. If we do have the 10-year moving down, that will be easier money for companies to acquire and obtain, to buy new things, hire new individuals, etc. And this is one reason why the president is really driving home a message to Jerome Powell to, hey, please lower these interest rates. But more data is needed from the Federal Reserve to go ahead and pull the trigger on doing one thing or another, because these implications, whenever whenever they cut rates, it usually takes a month or two or even 3 to feel the effects of those rate cuts. So it's not like we can just make a cut today and have instant results tomorrow. That's not going to be the case. So this is a long-term game that the Fed is playing, trying to make sure they don't make a mistake. So into NVIDIA. Now NVIDIA, as we see here, one of the major cap players, look at this technical analysis on this chart with this major pivot that's placed here, connected over to just the very next major pivot. And you can string this price action along all through this chop action, chop, chop. So what this tells me, though, is this trend line is weakened. However, it still can provide support, much like we see today. Look at where that low occurred on the chart of NVIDIA. Now, this trend line was tagged once, twice, 3, 4, 5, 6, 7, 8, 9, 10, 11 times this trend line has been tagged, telling me it's like Swiss cheese and can easily go lower. But on the selling pressure today, we did pause coming in today, kissing the bottom end of this area and then moving higher on the charts. What that tells me, though, is this area is vulnerable for a sell-through, which then the next area of support is going to be down here on NVIDIA, right around $87.12. A substantial fall should this area break in the next several trading days. But I do bring your attention back to the number of consecutive days of falling since this red candle pivot high. We're starting to get into near-term oversold territory. It wouldn't surprise me to see a little consolidation and then a continuation sell if we are going down on the charts of NVIDIA. Into Netflix. And last week, I had mentioned a lot of options expiration shenanigans that I thought from my analysis of the charts was taking place here on this chart. Now, notice today, price action, even though with the spiders, we were lower on the charts and moved lower, gap lower, and moved lower throughout most of the day. And our Netflix opened, gapped higher, and then immediately accelerated up into this trend line. And I'll rewind back. This is just, again, the power of technical analysis, understanding what pivots count, why they count, and also to leave this stuff on your screen for future trading opportunities. So see this major pivot here and another major pivot here, connected that out and strung it all the way through. We were able to see how this area got rejected. Then we had a bull trap, got a rejection down here to this low. Then next today, we gapped up, opened, and then check out this 10-minute chart. Where did we go to? We gapped open here and went straight to this trend line and sold off. We were able to execute a day trade here in our live day trading room. It was easy money. Just get in and take a $10 per share profit, which was only right down here. Then look at the collapse of Netflix afterwards. It went from $1,019 all the way down to $978, a substantial fall there on Netflix, especially when the markets were all selling too. But now Netflix turned out positive for the day, so give it credit. A lot of investors still believe in price action for it to go up. I think this is all going to end up moving lower on Netflix in the near term. Into another opportunity for you with some technical analysis, and you see it's almost like a spider web of information, a lot of support. Well, SMCI was in the news at the end of last year, mainly because they didn't have an accountant secured, and they were being at risk of being delisted from the NASDAQ due to their inefficiencies at providing quarterly earnings details. So in SMCI, a lot of investors were worried about it. They got out. And as soon as BDO stepped up and they secured a new CPA for their company, getting these reports out in a timely manner, the stock ripped. But then now has been under pressure over the last several months. So it's important to keep in mind these levels on the stocks when we're evaluating them on past price action where the stock was just left as dead and investors didn't want it. And now we're starting to approach that same price area now, which will give you opportunities if you're interested in middle to long-term investing with SMCI. So into this chart, as you see here, we have an inclining trend line here that was almost tagged today at $28.70. Very next level of support. Since this was so close, I imagine price action should come down lower and tag this area of $26.85. The next area of support with this declining trend line that you see right here is going to be just under $25 at $24.50. Then we have a major level of support at $21.54. So the collection of these three areas will give you a great opportunity to enter enter again, and enter to have an average right here for an impending bounce up to right around the $30 area, giving you roughly about a 20 to 25% gain. Now, keep in mind with any stock, it can go the wrong way, and it can go much further than you anticipate. So with this negative sentiment in the markets, which I do anticipate to be eased in the near future with any sort of good tariff news, if we don't get that news, major support on SMCI is going to be all the way down here at $15.27. All the while would be a fantastic buying opportunity for a longer term hold, because when the markets do come back up, they're going to rip these stocks much higher. These are growth stocks. And also with all the focus being on technology for the future, there's going to be a lot of opportunity just like this that you see on the chart that we can take advantage of, even with these bigger company names too. Now here with Tesla, we did now finally confirm beneath this wedge. Been talking about this wedge for the last couple of weeks. And then we also have earnings on Tesla tomorrow afternoon after the bell. Earnings season's fantastic for day trading. I love the volatility. We're going to have some more opportunities this week. I know Enphase reports. Google also reports on Thursday. So some of the big heavy hitters are going to be hitting the market, which will also alter market movements too. So back into Tesla. Tesla, as you see here, did close down beneath these pivots, which is now confirming this move down beneath this trend line. So that makes this trend line major resistance should it go back higher, but then it also opens the door for further selling on Tesla. Minor support right here at 213.54, but I think this area right here under $200 is the accumulation zone for anybody interested in a long-term hold with Tesla. You may still go lower if there's more pressure on the markets after price gets down to this area. Almost everything in the markets will go down too. However, this is a great area to start for any long-term type of investing into Tesla. Tesla, as you may know, they have cyber taxis coming out soon. And then plus they have the much anticipated home robot Optimus that will be released in the future too. I think that element is going to be a major game changer for the quality of life for everybody here in the United States and worldwide that needs a little bit of help at the house. It can keep those elderly folks from leaving their home and going to a nursing home, and they can stay in their house longer. The benefits of it are just, it's unfathomable. And I can't wait for some more technology like that to be deployed by other companies as well. But anyway, that's on the horizon with Tesla. And that also brings me to a close here on the show today. Thank you guys so much for watching Trading the Close. My name's Drew Dosek here at Verified Investing. I look forward to bringing you guys some more data and information tomorrow once we get that information. Until then, you guys have a great one, and I'll see you